Yes, so we were talking about different investing style, investing strategy. One thing is like intraday. Intraday is like it needs a lot more skills and we should avoid in the beginning. To do intraday, you need a very active time in the market. Like you have to be in front of your system all the time, and you need a lot more skills. You need to do some more training related to the intraday uh, trading, or you should spend more time. Okay, so I will say for this time, avoid intraday. Long-term investing strategy, our value is investing and growth investing. This need some level of understanding analysis based on what we have learned that we can employ, or we can put those knowledge and skills and practice, and then we can go for these strategies. These strategies will like value investing, growth investing, and systematic investing. These are less risky, and there your money will not be zero. You will be, you may need to spend some time, or you may need to hold your stocks, but your stock will not go like zero, right? So these are the very good strategies. You should follow one of these strategies. Below, cost averaging, swing trading, momentum strategies, right? This is kind of mid short term to mid term strategy, when you will not be holding your stocks for years and years, but you will be booking some profit on time to time. So this gives you opportunity to learn and employ, implement your strategy, your learning, your knowledge, and gain more knowledge, experience. So you can, and these are almost not very risky, risk free. You should do in little analysis, then you go for this is strategy. So swing trading you can do, you do some analysis, select some stock, then you can put some money and wait for 10 to 15% profit, you come out. Okay, the same momentum is a bit tricky. You need some expertise, but swing trading and cost averaging you can do. Positional trading or news based trading, these are like uh, less risky, but you may be like whatever news you have got or prediction information you have got, that might not go in your direction, that not be the true, then you may no lose the money, or losing the money in the sense you may need to hold for longer time, like election result, right? A lot of people would have expected that single government will come in all the state, Congress or BJP. And if that would have happened, or that will happen, then Monday market will go up. So whatever they would have bought on the Friday, that will they can sell like no on Monday. If their prediction has gone wrong, they would have said no, sold instead of buying. They would have sold something, or shorting they call. They would have sorted. People would have sorted, may lose money. So this is what happens. Then I will talk about alpha and beta. This alpha and beta is very important, and everyone should understand this. Not only applies in our no stock market, but in our real life also. So in what is called alpha, we'll understand alpha and beta. Then we'll go and check, select the stocks. So what is called alpha? Alpha is basically shows the profitability of particular stocks. Are the, if you are applying in our real life, what is the advantage or profit you will be gaining? So there will be some benchmark. In case of stocks, say Nifty 50 is our benchmark, and any company which is giving more return than benchmark Nifty 50, then that is the its alpha. Say no, Nifty 50 has given 10%, and Reliance has given 15% over one period of time or same period of time. Then what we'll say that no alpha of Reliance is higher, positive alpha, right? We are, if any company is giving same 10% return as Nifty is giving 10% return, then their alpha is 1. Okay, if it is giving more than Nifty, then we can consider like 1 point, Reliance in that case might be like 1.5 something. So higher alpha is always good. So we should target for the higher alpha. Our stock should give us return more than the Nifty 50 benchmark. Okay. So alpha, what it shows? It shows the rewards or profitability. On any decision, if you are taking, you should consider the profits. What are the profits, or what are the rewards for that taking that decision? Like, okay. So that if any company, I said 1, actually that is 0. Like if something is giving the same as a Nifty 50, we can consider 0. Like say Nifty is giving 10% and Infosys is giving 10% return, then they are giving same as Nifty, and it is like 0 alpha. Yeah. So we should always target for higher alpha. Okay, higher alpha is good, but anything no profit or anything rewards doesn't come for free. It comes with the some risk, and that risk is called beta, right? beta or the risk or the volatility. So any company which is giving us higher alpha and its beta or risk involved or volatility involved is higher, then we should avoid that. We should target for the less beta. So say Nifty is moving 10%. Okay. Uh, and this company, when Nifty is moving 10%, this company move 20%. So Nifty gets 10% up, then this company goes 20% up. If Nifty goes 10% down, then this company goes 20% down. So we should not no target this kind of company. We should target high alpha, that is good, but beta should be less. Like fluctuation in the stock price should be less. Same thing if you see that, right? Any decision you're taking, or you one side you can keep all your no profits or whatever you will gain, and other side you can consider all the negative part of it. So that is how you take the decision, right? So if zero beta in the sense like if Nifty is moving 10%, your stock will move 10% up or down, both the direction, right? If you are no Nifty is moving 10% and this company stock is moving 15% means its beta is higher, up and down, both the side, right? So alpha shows the profitability or rewards, beta shows the risk or volatility. Okay. So if you draw the alpha and beta, alpha is this X1, this direction, and beta is up and down. Okay. So what low alpha and low beta, right? This and this quadrant is what dividend stocks. If you want to select the no select the stock for the dividend, then you should go for the low alpha, low beta. Its price will also not increase and its fluctuation will be less. Okay. Then people who go for the intraday, right? Normally they target low alpha and high beta. Fluctuation will be very high. Those in the single day only the price will go no from 50 rupees to 75 rupees. And it may come down to 25 also. In the single day, fluctuation will be very high. So the trader doesn't it for traders, it doesn't matter what kind of company it is with how no how this company is doing in the future. They bet on the very short period of time. So they target the high beta stocks. So high beta stocks will give them return very high. Then goes momentum where alpha is beta is very high, risk is high, and alpha is also high. Beta is high, alpha is high means it will fluctuate a lot and also it will give you higher return. So in short period of time, it can give you more return. So that's why momentum strategy is active monitoring required. You should monitor and see when it is going up and when it is coming down. So that time frame or that momentum you will ride. So momentum stocks, if you are going for momentum stock, we should consider high alpha, high beta. Okay. Then comes passive investing or long-term investing, what we are trying to achieve right now, right? So alpha and in this alpha will be very high. We are targeting high alpha, good return, but low risk. Beta will be less. This is the low beta area. Okay. So this passive income. So here what we'll do, we'll be putting our money and we'll sleep or we'll no monitor very less. Then we will be getting good return. So with less risk, high return. That is our target, and that is called passive investing or long-term investing. So you understand which category of people goes in which category, right? People who are targeting dividend stocks or the targeting low beta, low alpha, they don't want very high growth. They are like happy with the returns they get with in terms of dividend. So dividend stocks are called low beta, low alpha. Intraday stocks are called low alpha, high beta, and momentum stocks are mostly high beta, high alpha, and passive income or long-term investing we target for high alpha, low beta. Okay, let's see this in the uh, some chart or what kind of stocks we will find. Okay, so this is ticker trap. Ticker tab, you don't have to go for the paid version or something. You can go for free version, just create your account and you will be seeing this. So I have taken this. I will remove this and I'll show you how we can do. So let me go say log out and log in again. Okay, I will log in. Yes. So I have this is free version only. So I'll see. Yeah. So this is how you get the home screen. Then what you can see for now, let it be 8 filter you click. Then what we'll see revenue growth for historical 5 years. Okay. Revenue 5 years is added. Then we go for alpha. Alpha, what it says, excess return of the stock related to its benchmark calculated using 104 weekly closing price. So we'll include alpha. Then we'll include beta. So you can add one by one filter or you can directly select whatever you want, right? Beta. So beta is what? Beta is measure of company's stock price volatility to the market. Compared to the market, how volatile it is, risk basically we saw, right? So what we can do, Mm, For now, I am just removing close price. So we'll see that alpha and beta only. Current mark. Oh, close price I would have kept. Is that Control Z bar? No. I need to closing price. Close close price. So last closing price we are talking. Okay. So alpha, we don't want a company which is giving a negative, right? So total is of now it is showing 4,730. So we don't want any company which has no given less return than index. So we got 3,150, and alpha as much as we get, it is good. Then beta, what we will say, uh, negative beta is good because negative beta means volatility or risk is less, and alpha we will consider till 1.25. Okay. So out of no 3,000 company, now we got 2,000 company. Now we don't want the small cap and no mid cap. Let's consider for the large cap. So we got large cap companies which have good alpha, low beta, around 50. Now we will be analyzing this 50 company. So this is how we can filter the stocks. Okay. So target for the high alpha, low beta is our target. And company growth, we have taken large cap. Yeah, 5 years growth. The growth should not be negative. We don't want company with negative growth. Okay, so we got 49 stocks, large cap stocks, good stocks, and we'll check one by one. Okay, alpha and beta. Let me change this. Yes. So Bharti Airtel giving 15% return. Let me sort by high alpha. Yes. Okay. So Adani Power is giving 70% return in last 1 year, and its beta is more than one. Okay. So would you like to take that risk, 1.2% of volatility and gain this? Then you can consider this. Then VBL is giving 50% alpha, like 50% more than the what Nifty 50 has given, with the volatility of 1.6. Then we target the some company which have a beta, like no volatility less than market. We are targeting that kind of company, right? And return is higher than the Nifty 50. So we can go for the Polycap. Polycap has given 40% return in last 1 year. I think it's last 1 year one, and its volatility is less than market Nifty 50, less than Nifty 50. So this could be the good choice. Okay. Then let's see any other company which has given good return and less volatility. Then BEL, Bharat Electricals, it has given 36% with less than no market volatility 70.07. Same goes TVS Motor, right? Then we can consider NTPC. NTPC had given less than one beta. So this kind of company we can consider. Then Sun Pharmaceutical. So like this we can see. I cannot export it because it is free version. But you either you can go and check here, or you can download this. Like you can get the paid version and download this. So alpha and beta strategy is also a good strategy. A lot of people follow this, where we target for high return with less volatility. And when we know the beta, then we know the volatility or risk involved with that. Suppose we want to go for high return and high beta. Let's see for mid cap if same things are there. Yeah. All right. So this company, that was large cap. This is mid cap. Okay. Other parameters are same. No, this other parameters also has changed. Beta we are okay. Closing price, alpha. So here mid cap, if you can see, uh, this one fertilizer chemical. Okay. I don't know. I have not heard of this company, not following, but it has given 97% return, and beta is half of the Nifty 50. So if Nifty 50 moves 10%, this company moves only 5%, right, in a day. So we should target this kind of company.